and thank you for joining us for a topic about something that's really pressing on CFOs' agendas and the challenges they're facing in their organizations and the concept of a subledger to solve some of those challenges. First off, I'd like to introduce our panelists today. Starting with myself, I'm Mark Aubin. I'm a partner at SAP Fioneer, and I'm focused on bank finance solutions. I've been involved with enterprise software for over 28 years as a user, as a consultant, and as a software vendor. And I've been focused on subledger solutions for the last 18 years specifically. Mike, would you give yourself an introduction, please?
Yeah, sure. Thanks, Mark. So I'm Mike Dolan. I'm a partner with Ernst & Young in our financial services industry group on what we call subledger technology. So we're a practice that helps clients evaluate, select, and implement product accounting subledgers. So happy to be here.
Thank you, Mike. And Adrian.
Thanks, Mark. My name is Adrian Mustafa. I'm also part of SAP Fioneer and currently product director for a newest innovation, the cloud accounting subledger. Throughout the better part of my career, I've worked actually on both sides of the table. So first in consulting, designing integrated banking architectures, always with a heavy focus on subledgers, and then implementing those designs for our clients. Most recently, I switched sides and started building the product myself. And that full cycle perspective is what actually drives my passion for this topic, because I have seen firsthand where things can break and what a well-designed subledger can generally change, and also what it has to bring to the table. So happy to be here.
Thank you, Mike and Adrian. All right, so let's get started. So I'd like to focus first on kind of what finance organizations and CFO offices are pressured with in the current environment. So, they've been running their operations, closing their books, they've been providing management and regulatory reporting, as well as adopting evolving and constant regulatory change for some time now. But now I've been seeing CFOs more openly discuss, either through press, through articles, through analyst reports, or even direct interviews, discussing some of the challenges that they're being faced with and being asked of. Mike, in your experience in the field, could you spend some time discussing some of those top challenges and the origins of those?
Yeah, I think you're right in saying that essentially the CFO function is being asked, every year to do more and more and more with less and less and less. And so, their budgets are going down, but their, expected output is going up, right? So sometimes that's, adding another basis of accounting, like IFRS in addition to US GAAP, or a regulatory set of, financial reports. Sometimes it's a merger or an acquisition that's changing the business model. Sometimes it's a new product introduction or a new accounting standard that's been implemented or changed. And so they've got to take in all of these new requirements, but at the same time they're expected to reduce headcount and be more efficient. And so it's definitely putting a lot of pressure on those organizations. And the only way they're going to really be able to sort of stay ahead of it is through investments in technology. And so they're all sort of coming to us and asking us, please help us understand which vendors are, in this space. How do I clean up this messy finance data environment that I've got? I want to have more granular information. I want to have better control over the data. It all needs to be auditable, but and I need to be able to answer any kind of report that I want, all the different kinds of questions they receive, and they're just struggling to keep up. And essentially, they're all coming to the conclusion that a general ledger-centric architecture just isn't enough to handle things. So, we're trying to help solve those problems and working with the top software vendors that can help them get there.
And just a quick follow-up on that, they have their current systems, they're being asked to do more. And in today's business climate, there's also a ton of new technologies that they're being asked to evaluate and see if that can help with those challenges. Does that kind of compound the problem?
Yeah, I think, we are unfortunately in an era where a lot of finance technology is kind of painfully out of date. I think, unfortunately, the industry hasn't kept up as as fast as maybe these organizations would have hoped. We do see the market for securities accounting, derivatives accounting, loan accounting, either they're under supported or they're supported by vendors that are in some cases sort of end of life. Because as we've moved from on-premise products to cloud native products, some of the vendors haven't made those upgrades or those investments to essentially rewrite 30 years of software for the cloud, right? And so right now the CFO community is desperate for more lightweight cloud native solutions that they're just not finding enough firms that are offering that. And so, and they want to be ready for things like AI. AI is really exciting, but AI only works if you've got lots of clean, well-organized, granular data. And their general ledger environments just don't provide enough of that just yet. So they want to start to supplement the general ledger with a series of subordinate ledgers, either at an intermediate or an atomic grain of detail. And then not only does that help with more transparent financial reporting, but it eventually will be needed for all of the hopes that people have for AI coming out of this.
Yeah, it sounds like what I've seen in my experience is technologies are exciting. They think they're going to deliver immediate value, but without getting the data right, they're really not going to help too much. So let's pick it kind of the architectural environment around that, and specifically around general ledgers, which you mentioned. I mean, every organization is going to have some kind of a general ledger, or in many cases, they could have multiple general ledgers just from the results of acquisitions over time. They are the foundational element of any ERP, and they've always been a key source for reporting, as your business activity upstream is ultimately going to end up in some form of accounting journals in the general ledger. So one would assume general ledger would be the place to start solving their challenges, to try to make it more robust to satisfy those reporting needs. But why isn't the general ledger where finance can solve those challenges?
In our view, organizations are trying to, a general ledger can help you produce accurate and timely financial statements. But what we found is that, they're fundamentally incapable of producing transparent financial statements, a flexible accounting process, that's based on rules-driven sort of approaches. And then therefore, it's not a very efficient process. So general ledgers are vital. They're important. Summary tier of your accounting book of record. But I think in our view, organizations are realizing their accounting book of record, their ABOR, if you will, needs to be multi-tiered, right? So they need a tier of granularity below the general ledger that's more at an intermediate grain, or all the way down to the atomic grain, where you've got, loan level journal entries or lot level journal entries in the case of securities, trade level journal entries, with an event dimension attached to it, meaning a transaction type dimension. So the general ledger, unfortunately, you can't put that many dimensions into it. Maybe you've got account, you've got period, you've got, a cost center, things, X number of chart fields. But what if I need, 20 chart fields, right? If I try to jam all that into the general ledger, I get this fat GL syndrome where there's too many accounts, too many, things to reconcile. It just, it makes for a very long close process. And so, but at the same time, people like the controls that a ledger provides. So this whole idea of subledger is saying, let's take everything we like about the general ledger, but push it down to a more detailed grain and have subordinate ledgers underneath that help take some of that burden away. It allows them to get the drillable balances and drillable activity with a transaction type dimension. But it ends up being a multi-tier ledger environment, which is what the subledgers are helping provide.
Mark, if I may add to the architecture perspective, the symptoms Mike describes all point actually back to one root cause. General ledgers still fulfill their core mission, but they were designed for a different era, and also have a different focus in mind. An era with fewer source systems, less complexity, much lower demand for granularity. Back then, a single general ledger could probably answer most business requirements. However, today that is not longer the case. Organizations need to have much more flexible and granular accounting layer. The key structural difference is a general ledger was built to summarize and report. The subledger, however, was built to capture, classify, and control at every level of detail. So this is less a question of scale, and it is more a question of the right architecture. The subledger provides the layer of logic and the granularity that the general ledger actually was never designed to carry.
That's excellent. Thank you, Adrian. So we started focusing on subledgers and some of the things that a subledger can provide. But I want to rephrase the question. Mike, if you're going into a client meeting and you're introducing a subledger, I'd like to understand, how are you presenting a subledger to introduce the concept? If a GL first approach isn't solving finance's challenges always, and the answer is typically, how do we bring finance and accounting closer to that granular and detailed business activity? How would you introduce, the perspective of the subledger?
Yeah, it's an interesting question because, people don't wake up every day saying, hey, I need better subledgers, right? It isn't often the first thing that comes to their mind, right? But if I talk to a group of CFOs and ask how many people have a subledger problem, I don't get many people raising their hands. However, if I say, what's your biggest problem in finance? They all say that messy finance data is the big problem, right? They universally rank sloppy data or data problems as like their number one issue. And so while unorganized finance data is the issue, what we kind of help them understand is that the subledger architectures, subledger design patterns are the solution to messy finance data. So what we're trying to do is come up with a cleaner and a better way of capturing, processing and organizing finance data. And again, we're using all of the great controls and design ideas from the general ledger, which they all love, but just moving it upstream. And so we're saying, hey, a series of ledgers, subordinate ledgers, prior to the GL stage, which are doing double entry accounting in an immutable store, that's tamper-proof, that's enforcing double entry recording methods of your transactions, is the way to go. And it's something that people can easily understand, to get their head around, and it integrates easily with the general ledger. But essentially it's trying to improve that data chain using subledger design patterns. And once they start doing that and they start, experiencing the benefits, they never go back, right? So, more and more people are starting to wake up and realize that, subledgers is the right architectural pattern, and then they're just looking for the right software to do it. But, unfortunately, in the past, technology wouldn't allow you to do much of this. And so, you would think that organizations have these things already, but, data storage was always expensive and data processing speeds were always slow. And so now that we have, in the last 10 years, the emergence of big data, technologies and things, we're at a point now where storage is cheap and processing speeds are fast. So people are rediscovering this sort of notion of a subledger for everything, essentially. And so it's taken off, but there's still a lot of banks, insurance companies, asset management firms who still have weaknesses. In our view, most organizations don't have a GL problem, they have a subledger problem. That's really the heart of the problem of most finance functions. And so we think that, these days, more and more, we don't have clients that are coming to us just for GL problems anymore. They all want some kind of subledger improvement.
I like how you tied your answer from going into your clients and saying, basically raise your hand if you have a subledger problem. They're not sure what they might have, but after discussions with them, trying to understand how a subledger can help them, or understanding how a subledger can help them.
It's not a very well understood topic. I mean, if you go on Amazon and try to buy a book about subledgers,
Yeah.
there's like nothing there.
So
If you
that's
try to
subledger
Google
101.
it, it's not a very well understood field, you know.
Adrian, I'd like to get your attention just for a bit on this. I mean, as a product leader at a financial software provider for subledger solutions, I'd like to get your perspectives. Now we've thoroughly established the concept of what a subledger provides. What are some of the key capabilities that it must have within it?
Yeah, let me build on what Mike just said and explain what a subledger actually does. In simple terms, it creates a structured finance layer between all of your source systems and the general ledger. So first, it brings together all business events from different sources. And that can be a core banking system, a trading platform, or any market data source. Second, it applies the relevant finance logic and creates the journals. And this includes valuations, enrichments, classification, and all the other accounting rules that your team has to adhere to. Third, it makes the result available not only for the GL, but also for other teams in a standardized way. And that can be colleagues from controlling, risk, or external auditors that you have to report to. And that cross-team aspect is really important. And there's a real-life example, a joke I always like to use because this reflects the reality that we often face at our clients. It's if you ask 3 different colleagues, especially from different teams, for the book value of the same financial instrument, you may get 5 different answers, and not because people are doing a bad job, but because data, definitions, calculations, and processes are often spread across different systems and teams and are written in different languages. So this is exactly the clarity a subledger has to provide. It has to enable the team answer the most important questions in real time, right? What is the KPI? What does it consist of? And which postings led to that number in the report or financial statement? And this traceability is key for all reconciliation activities, especially during month-end, year-end close. Teams need to validate the numbers for internal and external stakeholders. They need to identify breaks. They need to understand where those breaks come from. And in practice, a lot of time is spent exactly on that. And I think, this is where a modern subledger needs to provide better tools. You do not want the accountant to manually search for every reconciliation break. You want the system to proactively show where something is wrong. And one specific capability I always like to highlight is you have to have some kind of error and correction cockpit. As an accountant responsible for several source systems and portfolios, you do not want 5 different Excel sheets to manage your breaks. You want one clear dashboard. It should show you the open issues, the likely causes, and the next correction steps. From there, you should be able to drill down into the details and trigger the right action. And to pick up on Mike's point about messy data, in my experience, the processes after the data issues are often just as messy. So a modern subledger should therefore not only make the data transparent, that is the foundation, it should also guide the accountant and the team from issue detection to correction. That is what makes the month-end close definitely faster, more structured, and manageable. And just as Mike pointed out in the beginning, you have to do more with less.
Yeah, and I think adding like rules into that automated process is going to adding a lot of flexibility, configurability, resiliency of the environment, and so an event-driven process with supplemented by a rules-based approach, right, is helping make those processes way more effective than they used to be. And so we're very excited to see how each of those steps you talk about are getting more event-driven and rules-based, and so it's exciting to see.
Yeah, I've seen a lot of cases in the field where a lot of organizations, since they're focused on trying to get to that granular level, transparent data and access to that, they immediately assume, one of the data platform, one of the big data solutions can serve as a subledger. While it potentially certainly can, just listen to both of you, speak over the last few minutes. There's the concept of data, but there's also the rules and the processes and the accounting topics within it. So I want to kind of focus on that. How does a subledger bring that business transactional side, finance and accounting together, and what are some of the, I don't want to say the cons, but how is that sometimes not served best by one of the data platforms in the market?
Yeah, no, I'm really glad you brought that up, Mark, because and it kind of ties in exactly with what Adrian was just saying, right? So, because we do see some organizations get tempted to say, hey, especially now with AI, as long as I just put all my data somewhere, if I create a big data lake or data, data warehouse, and I have AI, like, do I even need a subledger, right? And it's tempting to think that like we'll just use, just big, giant, data dumps, put AI on top of it, and everything will be solved. But you do need to follow that automated process in a controlled manner, orchestrating your events, having rules-driven approaches to sort of say what is the exact sequence of which entries need to be recorded and how do I control that? How do I make sure it's being done right for each position, each loan or trade, right? And so, you know, uh, the data platforms are great for the results and they're great for, being able to analyze and run, analytics off of it. I think of them as the answer for your systems of analysis, but not necessarily your systems of record, right? So you still need your system of record with the orchestrated process to work the right way in order to generate that results output that can then be put in those large data platforms where we can do all of our analytics. But it doesn't, eliminate the need for control over the business logic and the subledgers are providing that control. They're providing that data pipeline, if you will, that processes the transaction at the time of execution and recording that the other, just a large data dump just doesn't do that.
And another key thing on subledgers is they can be quite industry specific. I mean, they go beyond just event-based accounting. A lot of the software vendors out there, SAP Fioneer included, can deploy regulatory requirements. So, rather than just creating debits and credits, we can do out of the box measurements, valuations, calculations for, the different financial instruments or different business events for that particular industry. And I've got to imagine trying to, put all of that in a data platform or data warehouse is going to be pretty taxing on an IT organization to kind of keep up with, those types of business and accounting requirements. So that's kind of where I've always seen a subledger. It's not only accounting, but it's also the accounting process to your transactions as well. I mean, a lot of the different industries have come off, whether it's insurance with LDTI and IFRS 17 or, the banking changes with CECL, people were looking for those solutions and the data platforms aren't the best place to put those accounting calculation regulation type changes in place.
Yeah, I think that's right. The business logic layer can't be underestimated. Those data platforms are great for storing and retrieving data, but not necessarily where the business logic is for calculations, orchestration of activities, all that stuff. That sits somewhere else.
Let me add one thing here. Coming from a product background, I'll be honest, turning a data platform into a subledger is a hard task, but not an impossible one. If you have a really strong IT team and solid accounting expertise, you can probably build the base functionality yourselves. However, what I consider practically impossible, at least for a bank or insurer, is building something that also stays resilient through accounting changes and business model changes over time. Getting the first version running is hard enough, but building it in a way that continues to work correctly when a new accounting standard arrives, or when management pursues new product types and new business model, and building something that remains understandable to colleagues across all divisions, IT, finance, and risks, even years later, that is where it becomes an impossible task for an institution to sustain on its own and build a subledger that lasts. Beyond the technical complexity, the total cost of ownership and the time to value calculation, they simply do not add up. And I think this is where a dedicated software vendor fills that gap. Experts with experience across many different client environments, teams tracking up and coming regulations, and a product that is built to adapt. I think that really makes a change and lets the product also last over the years. What you build yourself may cover your needs today, maybe even in the next years to come. But what tends to happen over 5 to 10 years is it deteriorates. It becomes a black box that only a few selected people in your organization understand and can maintain, and ends up being harder to change than the problem it was meant to solve.
No, that's an excellent segue. So you're looking at a subledger should be basically future-proofed for the accounting department. So, we've talked about, so if you have a subledger solution that is future-proof, that's going to evolve and be dynamic with your business as you go forward. And then Mike, we talked on the evolving technologies and everything, needs to be cloud native as much as possible. Once that's in place and we have a lot of automation that we've talked about, typically finance is able to be in a more productive stance and kind of have that foot forward rather than being on their heels and reactive. So once that's in place, what are some examples of what a CFO organization can achieve?
The biggest kind of benefits, or the big thing that comes out of any subledger implementation, first and foremost, above everything else, is a huge improvement in financial transparency. That is, for the first time, often these CFOs or corporate controllers, product controllers have drillable financial statements, right? So because I've got a chart of accounts that's subordinated to the parent GL chart of accounts, and because my periods are aligned and I've just added extra dimensions, I can now, have, balance sheets or income statements, roll forward reports, all that kind of stuff, where I can drill into the numbers, not just one or two clicks deep, but 10, 12, 11, clicks deep. It'll just keep going deeper and deeper, right? Which they could never have before. And so just the explanatory benefit that comes from that, and the trust that is engendered by saying, I know what's underneath my numbers because I can deconstruct it by clicking into it, and then I can roll it back up to the top level number, and everything still foots and ties. That, I've had CFOs tell me, like, look, the efficiency gains were great, the flexibility was great, but the fact that I can trust my numbers, that's priceless, right? And that's a good feeling, like when they can get to the point where they say, I can sleep at night because I know what's underneath my numbers. Every finance function you talk to will say they have a finance data warehouse or finance data mart or whatever. But if you ask them, do you have drillable financial statements? Unfortunately, a lot of them say no, they don't have that. So the subledgers are giving you that ability to have multi-dimensional journal entries and balances that can now be well suited to a BI environment that allows that kind of deconstruction, slicing and dicing of the numbers that they never had before. The other big benefits are, of course, flexibility. Like, if you have new accounting standards changes, new products, new businesses, you want to add new accounts, because of the rules, orientation of these subledger environments, the cost of change or the flexibility benefits that come from being able to just add in some extra accounts, some extra rules. If you want to do another basis of accounting, you're using the same construct. You're just adding new transaction types or new events. That's a big benefit. And if you fix the transparency problem and the flexibility problem, you automatically get a lot of pickups in efficiency. So clients will see, far less manual reconciliation and far less manual report prep after a subledger project, and that just saves a lot of time and headcount. So the efficiency gains that you pick up by solving the transparency problem and the flexibility problem are pretty substantial. So again, most of our clients would say, I've got accurate and timely financials, but I don't have transparent, flexible, or efficient finance processes, and the subledgers go a long way to solving those pain points.
Mike, I think there's another dimension here that often gets overlooked. Subledgers democratize the data, or really they democratize accounting itself. And I'm curious whether you've seen this too, because in every accounting department I work with, there's always that one specialist who has been with the company for 20 or 25 years. And Basically, they hold the complete picture of all the complex data warehouses, Excel workbooks, and accounting workarounds, but they are essentially alone in that knowledge. And leadership always gets nervous when that person takes a longer holiday because, in practice, nobody else can fully control the data. For younger colleagues joining the team, getting into the topic is extremely difficult. The legacy structures have grown so complex that you need more of an IT background than an accounting background just to navigate them. And that is exactly where subledger changes things. By standardizing the content and making everything fully traceable, it opens the door for younger colleagues and increasingly for AI as well. It bridges the gap between the long-serving experts and the new generation who wants to contribute but cannot because the complexity is simply too high. That is one of the most important and I think most underrated effects the subledger has. That shift in knowledge distribution actually begins during implementation itself, and I always find it one of the most rewarding parts of a subledger project, because in order to implement a subledger, you have to go back and translate the old complex data warehouse and Excel logic into a standardized format. And what I always see during those projects is that teams which never really communicated, or colleagues that never communicated before, suddenly start collaborating. The younger people are generally engaged because they want to work in the new environment, and they have to work with the experts who know the structures since they've been set up. And that knowledge transfer, that collaborations usually happen at every implementation I've been part of.
I very much agree with that.
Yeah. And I gotta imagine that, like you were saying, Adrian, there's one or just a few resources that are kind of responsible for managing the accounting policy across the organization. That's a bunch of different data marts, data platforms, Excel workbooks, and other systems. That's a challenge in itself, that if the company controller says, oh, we have to make this accounting model change, especially in financial services, there could be a number of different transactional core banking systems. On the insurance side, there could be a number of different admin and policy systems through acquisition. Trying to make those changes across all those different source transactional systems could be a nightmare, not only technologically, logistically, but also a lot of risk, because if they get accounting wrong anywhere, that could be an impact in their numbers. So having a true enterprise subledger in place where they're making the accounting change in one place has got to be a massive benefit from a risk perspective as well as just an expediency perspective.
Yeah, I think that is exactly the point. And if you want to make accounting changes faster with less risk, you need to have more than just clean data. You need a system where the accounting logic and the process context and the control framework as well are all structured in one place. And that also ties into something I want to make sure does not get lost. It is the question of AI readiness. Mike said it in the beginning, as CFO and as accounting team, you are expected to do more with less. And the question every team is now asking is, when can we actually bring AI into our systems? And I want to be direct about this because from our own product development, our own experience, I know exactly how painful it is to integrate AI into existing systems. We've had to retire entire modules that were working basically fine for the last years, simply because they were on AI ready. And that is an important lesson, because remaking something or replacing it completely isn't just a technical cleanup exercise. It is an actual enabler for the new technologies. And what that experience also brought to light is that AI readiness basically comes to two things. First, you have to have a structured data model that the AI agent can work with and understand. And second, and this is also really underrated, is you have to have a clean process model. Process model is always what is missing when someone tries to build a subledger out of a data warehouse. The real question is whether the subledger is designed in a way that allows AI to become part of the accounting processes. And this is usually where many traditional accounting systems or self-made solutions reach their limits. They may store the data and produce the postings, but they were not designed to expose the logic and the process context in a way that AI can actually work with.
Yeah, just to pile on maybe. So we've got clients who have worked with us on, maybe they started with a investment securities subledger, 10 years ago. Then they moved on to a debt and derivatives subledger. Then they moved on to a loans subledger. Then maybe they did insurance policies and claims or something, and they've been marching around the organization, moving things onto subledgers, and they see benefits each time and sort of, believe in the concept and all of that. Then we've got other clients who have been thinking about it, but they haven't really started their subledger journey yet, right? Maybe they're still on the fence or they're still understanding what the benefits are. But I tell you, those that have, further along in the journey, they're now experimenting with AI. And again, because the data's there, it's clean, it automatically ties to the general ledger. They've got the drillable financials. When they put AI on top of it, those teams are really cooking with gas. They're really seeing huge benefits from AI because the model's only as good as the data going into it, right? And those organizations are leaps and bounds ahead of those who haven't really started the journey yet. You can put AI on top of a messy environment, but again, it's a garbage in, garbage out problem. It's not the model's fault, right? But it's just producing just erroneous information, hallucinations, whatever you want to call it. I think for those organizations that have started their journey, and even if it's only for some of their asset classes and things, they're finding that putting a finance data science team in with their accountants, they're seeing huge benefits. It's pretty amazing.
So, Mike, you just touched on, how organizations are starting to approach, and the ones that have, gone through transformation over time are really cooking with gas. I want to focus on that journey a bit. I mean, what are different transformation pathways or different implementation methodologies for putting a subledger in place? Should organizations go big bang and put an enterprise subledger, or should they, bite off more measurable pieces?
Because sometimes it's a newer concept and people have to get familiar with the process model that Adrian was talking about and understanding the data pipeline and how things flow end to end. It is good to sort of start small, start with a single asset class, like, maybe you do investment securities first, and then you do loans second or something like that, and then your hedges after that, whatever it might be. But we think approaching it in a piecemeal fashion gives people in the finance organization and finance technology team the ability to sort of learn the basic principles, get the terminology down correctly, understand, which requirements are universal versus, product specific, get your feet wet, and then start growing from there, right? Sometimes we'll see organizations who are tempted, maybe their problem is so big, or they just want to get to the results faster. They want to do like the entire balance sheet in one big bang project that literally fails 100% of the time. Like we don't see that very successful, hardly ever. I think there's only one client I have that was able to pull that off, but you can't boil the ocean. You have to kind of start small and grow from there. But get started somewhere, get your organization comfortable with it, realize the benefits, and then cut the people loose, and you can tackle a lot more in wave 2 or wave 3. But we believe that starting piecemeal is the path to success for most organizations.
So I'd like to thank you both, Mike and Adrian, for your time today and discuss the challenges the CFO's office is facing and how having a subledger as a foundational component of your finance technology landscape can unlock strategic benefits, not only for the organization, but also moves the CFO forward into a position of strength and value for their firms. Mike, leaders such as yourself at EY, being a leader in subledger transformation initiatives, I encourage our audience to have a conversation with you. I want to invite you to have some closing thoughts on your practice at EY and how you can help clients.
Yeah, I mean, we're very passionate about this subject. Our entire firm was built on the principle of trust in financial reporting, right? We have 80 years of audit history, providing audit opinions on financial statements to improve the capital markets by having trusted financial numbers. This subledger offering is a big part of our consulting response to that same trust agenda, right? So we're on a mission to clean up, the world's financial data and improve trust in financial numbers by the CFO community and stuff by, again, giving them the drillable financial statements, giving them, more rules-oriented approaches to how they, tackle new products, new policies, new businesses, and using technology to do all of that. And we're out preaching the gospel on the benefits of subledger design patterns and helping them find software that can enable this. And so we're always excited about talking to vendors like yourself. We want to help our clients solve these problems by bringing expertise to market, but we can't do that without a good, healthy community of software vendors that are equally passionate about this stuff and bringing very well-designed software products to market. So we appreciate having the chance to work with you guys and get to know the products and make this whole world better by having better solutions at hand.
Excellent. And Adrian, you're the product director of a cloud-native subledger offering in the market, the SAP Fioneer Cloud Accounting Subledger. And I think you've got something planned coming up.
Yeah, thank you, Mark and Mike. And also thank you to everyone who tuned in today. We've been talking about what a modern subledger has to deliver, and that is exactly what my team and I are working on every day. We are hosting a second webinar where we will go beyond the concepts and show the functionality in practice. We want to show what our definition of a modern subledger is, how it works, how financial instruments are represented, and how finance teams can be more productive. And building on, Mike, what you just said about trust and clean and financial data, let me take it even a step further. If you want to build or go on a subledger journey, you want to build trust on the functionality that the vendor is bringing. So vendor evaluation and critically looking at the product becomes really important before you even start implementation. And I have always strongly believed in challenging the subledger solutions on the market, including ours. Let the software vendor show you how your specific financial instruments and your processes may look like on a new platform, and ideally get access to a system where you can actually explore and test things yourselves. That is exactly what my team is excited to do, show what we've built and have it challenged by partners and customers. So basically that is our invitation to you guys. If anything we discussed today resonated, we would love to show you how our subledger really looks like in practice.
It's a very, very exciting time and very much looking forward to seeing that. So anyway, thanks again, Mike and Adrian. Excellent insights and experience that you shared, and I've enjoyed speaking with you both today.